Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, March 12th. And yeah, we've got, I believe, CPI data coming out in about 10 minutes. Sorry, I'm starting this stream 20 minutes later than I had initially intended, but working, in the evenings is kind of tiring me out. So sorry about that. But anyways, I'm going to take us through the normal tickers. And then I thought, I might as well do a follow-up on OKLO, which is a nuclear company. And I thought it would be a nice complement to URA, and then also wanted to do a follow-up from last night's video on NIO, just because there's some other things I did want to point out. But first, let's get into the UVIX, and this is the 2x long VIX futures ETF, which closed yesterday at a price of $47.23, which actually came down by 0.06%, but we did hit a new high for this run. And so, it's making me think, I took some profits over here, and man, I could have had, a 50% upside, but, I did not expect it to be breaking above 40. And, I did mention in yesterday's pre-market prep that I thought right around $55 could be a top, and it does seem like we have potentially put in a topping signal. And so actually there are a lot of things that do suggest that. And so one is that we have this pretty massive wick to the top side, and we did close in the bottom half, I'd say bottom third, maybe not bottom quarter though. But that does suggest that this could be a topping signal or topping tail with that big wick up to a high of $52.99 yesterday. Although we did close above the 200-day moving average, which is currently at a price of $46.83. This would be the second day in a row that we have closed above that moving average, although we did close slightly below yesterday's close. Sorry, we did close slightly below Monday's close, and also that would suggest that we have not gotten a confirmation or a confirming close above that 200-day moving average, because we did not close above Monday's high, which was at a price of $47.26. Let's see, 3 cents. We closed 3 cents below that. Yeah, and so that is marked up here. I was thinking 3 cents. Why does it say 0.06%? Different numbers there. And yeah, so what I might do, I feel actually at this point, I know I have been migrating this green box over every single day. I am feeling pretty confident that we will be seeing the top there, and I think that we will, be able to get a signal in whether or not the top is actually in with the CPI data. If that does come in, within expectations, or I believe, I believe it's CPI. I'm not sure. We'll check over on X in just a minute when that comes out in about 6 minutes from now. But I just wanted to adjust these boxes, and so this should be 52.99. All right, and then I would say, actually, I should probably adjust the bottom of this, that I feel like 30 is probably a more reasonable bottom to start, getting back into a position. Maybe 31, 32, do have that alert there. But yeah, we'll have to see with that. And it does look like in the pre-market, we are trading right around $45 a share. If I do flip over to the 10-minute time frame, we can see that it has pulled back some. Does look like we do have the highs from, it looks like the 7th, so last Friday. That might be acting as support. But one thing I did want to point out, forgot to point out over here on the daily, is that, as we are and have pushed to new highs here, what has volume been doing? Volume has been diminishing. And so that suggests that, there's not enough behind this move to really suggest that it will be continuing higher. So that is another reason why I'm feeling more confident about this pulling back. And so if we do pull back to $30 a share from current price, which is, right around, let's see, 45. Let's just do it from this point here. And that is, a more than 30% drawdown. So good to be aware of that. But if we do flip over to the VIX, this is the Market Volatility Index. That did close yesterday at a price of $26.92, being down about 3.37% on the day. And with this one, there's unfortunately not pre-market or after hours trading because this is options as far as I understand. So dealing with expiration dates, all of that. And yeah, so we'll have to see where this starts moving. It does look like there could be a potential double top. While it's not as clear of a topping signal as what we're seeing over here in the UVIX with that big wick to the upside. But over here, it does seem like that spinning top, double top with the two wicks, getting above 28.32, but not being able to close above that level and also putting in a lower close. I do think that with this one, we could be seeing a move down to this line here right around 22, and also want to be paying attention to $20 because that is kind of the level to be keeping an eye on when volatility really does start to increase. But anyways, let's flip over to the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $555, 555.92 cents, being down almost 1% on the day, but bouncing about almost 5%, 4.7. So I feel like that's probably a suggestion that the CPI data, the economic data that we're getting, is probably going to be suggesting that the bottom is in. So I think this is actually a really good reminder when everybody is screaming, oh my gosh, the market's ending, everything's going down. Whether it's big names saying that, small names, family members calling you, telling you that the market's crashing, hope you're doing all right. That's actually a bottoming signal. And so that's what we've really been seeing so far this week. And so I do think that, while it did go lower than my little green doodle there, I do think that we will potentially be putting in a bottom here. And that is, higher lows. And actually thinking about this, and I might actually, I'm going to delete these doodles that I have here. Just don't need so much clutter. But, I was just looking at this point here, this point over here, and hey, there's a point over here. Maybe if I connect these two, and I'll do it blind just to see where they connect, and maybe they're suggesting that we're at a bottom now. So I've got the low over here, $489.12, and then going to connect it with the low here. And I should note that date was April 19th of last year. And then so the low over here was, as you might guess, August 5th. That was at a price of $507. So let's put that in there and see, does that intersect with where we are currently at? Nope. So that could be suggesting we do have some more downside to go. So what this could be suggesting is maybe we get a little bit of a bounce, but then a rejection, maybe from that green line, which is at around 561, or maybe we go up to around that 200-day moving average, or this yellow line, and then do something like that. So that could suggest, if we do something like that, put in a little micro head and shoulders pattern there. And I'm actually curious to see, actually, I'm not going to do it like that. I was just thinking, if I do a measurement, where would that suggest that the bottom is in? Going to the neckline, that would actually be going a little bit lower than I have it drawn there. But I do think that's pretty interesting. And I should do this little doodle that could suggest further to maybe worst case scenario 3% to the downside, but I feel like more likely about 1% to the downside possible. But we could be getting, like I said, a bounce, as if we do look over at the pre-market trading, so flipping over to the 10-minute time frame, it does look like we're up about 5%. So yeah, in the after hours, we did pull back towards the close yesterday, but then kind of held that, floated up a little bit, and we didn't even really gap up that much. It looks like, let's see, where did the day change here? Yeah, so no gap up. Hey, man, I think CPI data, I think the economic data that we're getting, 365, I think the bottom's in. Congrats, guys. Congrats for not freaking out. And so, yeah, this is on the 10-minute time frame, and we're up 9%, over 9% in the pre-market. And let's flip over to, let's see, X. I'm just going to pull up a new tab here. And so no notifications yet, so I just like to see, oh, Bronx Viking is saying bullish. Watcher Guru is saying, U.S. inflation falls to 2.8% lower than expectations, so that is good. Congrats for enduring the pain, everybody. Yeah, Hydro Hustler, what's up in the comments, in the chat? I think that we're going to start to see things looking pretty good. So, but at the same time, don't get ahead of yourselves. It is still a volatile market. Trump is still the president, and he has been a pretty volatile president so far. So good to manage that risk. Maybe it's a good day to take a little bit off the table of getting into the green or, at break even. So do consider that. But yeah, just flipping back over to the daily, 65 in the pre-market. We do have the 200-day moving average at 569.86. So right around 570. So what I could see with, we're going to be opening up around here. Maybe we do something like that, or maybe we get up to that yellow downtrend. And so with that yellow downtrend being said, with these levels over here, the prior low of 575, also this light blue downtrend, 575, let's look to see that hold as support. So I'm just going to circle it here. Oops, I'm going to do a little bit better of a circle. And so I'm going to, make that, let's see, I'll do that blue. Let's just keep our eyes on that. I think that we could be getting rejected from there if we are to be going higher. And it does look like we're pulling back a little bit in the pre-market. We were up at 565 or so, and now we're at around 563. So let's not get ahead of ourselves. Let's manage that risk, all of that and stuff. But it does look like the bottom could be in there. And so then let's flip over to the SPX real quick. This is the S&P 500 index, and this closed yesterday at a price of $5,572.07. Like the SPY, also being down about 0.75%. And, no pre-market trading on this, but if we do look at this big downside move, let's see from those highs, how much of a drawdown did we see here? About 10%. So I think, just thinking about that, we moved into the double digits as far as percentage goes. Seems like a pretty nice bottom there, with the low yesterday being at $5,528.41. Also does look like we put in a spinning top there with a bigger wick to the downside, so that could very well be suggesting a bounce. And like I did with the SPY, I'm just going to delete these doodles, and I will circle this pivot point there. All of those levels right around $5,773.31 is that prior low from over here. That might be acting as resistance, so do keep that in mind. But I should also note the 200-day moving average is at a price of $5,735.89, so do keep that in mind. And so now, looking at all of that stuff, let's flip over to Bitcoin. But before we do that, let's also flip over to X to see if Gareth Soloway does have a little update. I have not gotten a notification from him, but Crypto Rover 44 seconds ago did post that Bitcoin pumps because U.S. inflation is lower than expected. So more good inflation data. Also, the Bronx Viking, cool CPI. Now, will the gap uphold? And that is the big question. That is the thing that I'm talking about, getting that rejection from those downtrends. But yeah, I mean, Shane Gillis is, truly nervous. Don't be truly nervous. Let's see where we go. But anyways, looking over at Bitcoin, I drew this arrow going up to this, approximate, because maybe I drew it at the not exact right level. Depends on the exchange you're looking at. The not CPI, the let's see, the CME gap. The CME gap is just below $87,000. I got this alert here at 86,000, and I bought the dip, over a couple days. And I think my average is probably around 81,000, only $20 on it, so no big deal. And I plan to just trim that or exit that kind of a little swing position at around 86,000. I don't have a limit sell order placed though. I just kind of want to see what happens. But that is just a little exercise for me. And like, oh, well, if there is a CME gap that goes down over the weekend, maybe it's a good idea to buy the dip and then to sell there. Got the long daily dollar cost average position with Bitcoin, but that doesn't mean we can't take advantage of swings. So, that is something I might like to do. And looking at this too, we can see the lower lows over here. I'm going to actually draw this up here. We do see the lower lows, and with the RSI, we see higher lows. And so that is, as you probably know, that is bullish divergence with the lower lows in the stock price, higher lows in the RSI. And so that suggests we could be seeing some upside. And it does look like we are getting that with Bitcoin now trading around $84,000. Let's see if we hit 86, 87. 1,000 today. Maybe we head up towards 100,000, but we will have to wait and see. And so I will be switching over to URA, but did just want to check back on X to see if we've got some more posts here. No notifications from Gareth Soloway yet, but Colin is posting here. If you tuned into the weekend video, congrats, you got paid. Tesla is rallying. The bottom has been formed. So looking good there with it up 5%. And to be honest, I do have a small position in Tesla, but I was actually buying Tesla leveraged long TSLL, just trying to get my average down. I feel like that will be paying. I'm just looking for a 20% swing. Maybe that gets filled today, maybe not though. But URA, flipping over here, this is ticker symbol URA, which is the Global X Uranium ETF, which closed yesterday at a price of $23.66, being up about 2.4% on the day and going up about another 2% in the pre-market, above $24 a share now. And so I had talked about this coming down to around 24.50. We have traded about the past week or two below 24.50, hitting a low on Monday, March 10th. At a price of $22.78. I feel like that was a dip buying level for uranium, and we might be seeing a rally. We do have this gap up here at around $30.53. Going from, the close from yesterday's price up to that gap fill, that's about a 28%, 29% move to the upside. So looking pretty good there, although we do have all of these moving averages between here and that gap. So do consider that 24.50 might be acting as resistance since we did break below it, but I think that we could be seeing the moves above it now. Then we do also have this yellow downtrend, which is the basis of that parallel channel there, the bottom of it. And so that would be perhaps getting a rejection around 25.50 or so. So do keep that in mind, maybe 26. We do have this previously filled gap up here around 28. That would correspond with this consolidation there. So might be getting some rejection there a lot also with those moving averages. So do keep that in mind. But yeah, if I do flip over to the 10-minute time frame with this, to get a gap up 24.25 now from the after hours into the pre-market, and then a gap up with that CPI data. So we'll see where this takes us, but I think it could be going higher. And with that being said, I kind of wanted to take a look at OKLO. This is ticker symbol OKLO. If we do look over at the profile, this is an advanced nuclear technologies company. And so I think if we're following URA, the uranium ETF, I have heard that this is actually not the best managed ETF, could have some better makeup in the portfolio. And so I was thinking, hey, might as well be trading OKLO. So I do have a few shares of this, nothing too crazy. We do have earnings coming up on the 24th. So that's going to be on Monday, I believe. And we did break below what looks like it was the prior highs over here around 26.40, and then also from this Fibonacci retracement we can see that 786 at 26.30. 13. We did close lower than that yesterday at 25.47, being up 7.5% on the day, but it looks like we're up about 5% in the pre-market, now trading around $27 a share, being above that 786 at 26.13 here. Flipping over to the 10-minute time frame, you can see that level marked there. We are above it. We're also above that orange line, but maybe we get a back test before a continuation higher. Or maybe this is a fake out above it, as we do also have that light blue uptrend that is still above us, as you can see over there. And that does go back to the lows from September 9th of 2024, as well as the low over here from December 16th. Did get some consolidation above it over here with a little bit of a fake out break in October of last year. And now it looks like we're getting that and getting back to those all-time highs. I think that this could be heading up towards, 100% move to the upside. So I think it's a pretty nice trade there. So good to be keeping that in mind. But we do also have, let's see, the 50-day moving average at $35 exactly, and the 21-day moving average at 38.18. But I suspect if we are starting to move higher, starting to rally, those will start to turn around, go to the upside. So pretty cool there. Yeah, I am excited about this one. And let's see, just flipping back over to X to see if there's any new stuff here. Got a notification. I imagine this is from Gareth Soloway. And so what he is saying, that inflation comes in better than expected. Markets ripping CPI month over month, or mom, if you like, comes in at 0.2% versus 0.3% forecast, whereas CPI year over year, or YOY if you prefer, comes in at 2.8% versus 2.9% forecast. So looking pretty good there. I think that, we're looking pretty good. Don't need to be nervous anymore, at least not for the near term. But one thing that I did want to follow up on really from yesterday's video that I put out very late is NIO. And this actually comes from something, if we do go back to X, I just want to make sure I have the right time frame in the window. This is coming from Mr. Chart Norris. He did say daily candle chart and then did lol, laughing out loud, LOL. And I said, no, don't end it, and crying. And so what he drew up here is, basically the same thing that I have drawn up there, but he pointed out that basically the same kind of levels that I have over here, that this is kind of like a little head and shoulders pattern. Actually, I guess I didn't really have that marked, but I did talk about it, I believe, kind of with this line here going over here. Tops there. Maybe we get a retest of that. And let's see, this is from the August lows. So yeah, like that. That's basically the same kind of time frame that he has here. The thing that stood out to me is, this is what I was previously referring to as like volume shelves. I believe these are volume nodes, technically, is the proper term. And so we have this high volume node over here. We're above that, so that looks good. But it does look like we have bumped our heads into this other high volume node right around 522, corresponding with the high over here that I talked about in last night's video, and also corresponding with all of this consolidation here. So if we're not able to continue higher, if we are getting some resistance, we have this little low volume node in the middle there, and so we could be getting a retest, kind of like what I talked about in last night's video, which would be something like this. This is kind of like the worst case scenario to be preparing for. So do manage that risk, and I was thinking that I could remove some of those drawings, and I could throw up the volume profile, the VP here, so we can see basically, what Mr. Chart Norris has drawn up here. But it does look like the current price is over at 522. We do see that there. But it does look like, let's see, I'm just going to pull up the details on this. And so the inputs, or the style, I should say, the point of control for this is going to be around the levels over here, but the volume average high, it looks like, is at around 546.6, $5.46.6. And that, or, right around 550. So maybe we go a little bit higher before getting rejected, and then we could potentially be pulling back to that 200-day moving average around, let's see, $4.72 or so. So do keep that in mind. That is like the low from today. And yeah, that would correspond with that. And if I do, just throw my drawings back up here, we do see, that would correspond pretty nicely with my little doodle there. But I'm going to get rid of the volume profile just because it gets a little too cluttered. And there's another thing that I did want to go over with NIO. I didn't go over last night. I actually kind of forgot to go over it. And that is going to be the data for this contract. This is one that I do hold, but it's one that I think is important to be following up on. And so this comes with the open interest data here. And so we can see that the open interest has been in the 60,000s going back to February 12th. That has increased to about 65,000 from last Friday. But then it did pull back a little bit, and then yesterday, actually, I guess on the 10th, we did see a volume of 6,000 contracts traded, and that came down some, going down by 2,000 contracts. And then if I do refresh this page, we do see that we saw another decrease of about 800 contracts, so 62,000 contracts open there. With these, total premiums from the past couple of days resulting in a sell-off, a little bit of that contract. But like I said, we do still have, the open interest being in the 60s still. It was in the 70s in the past, so still looking pretty good there. And so, I'm not, I think that's really just maybe people taking some risk off the table. We maybe are seeing some of that in the pre-market with it coming down by about 1.73% or so. And so let's keep an eye on, 470 if we do pull back to that before a move to the upside. And I guess we could also look to see if the Greeks got updated over here, the max pain 450 and then 450 for next week. So no longer $4. And so that does suggest that those market makers, that max pain is kind of putting a little bit of a magnet there for NIO to be pulling back to 450. So good to be keeping that inside. And then I was just about considering to ending this, but I did see Hydro Hustla was requesting Nova, so I'll pull that up. And then and this is Sunnova Energy, and that is going up about 5% in the pre-market. This, I'm going to say, is, I feel like, a very risky play. I think now is not the market to be in risky speculative plays. And I say that because there was this massive gap down. It looks like corresponding with earnings that came out on the 3rd. And that was a gap down of about over 60% on the 3rd. It looks like, 64.25% down over there. I feel like I've gone over this in the past. I do have this blue line here, which looks like it was a gap that was filled. But I might, since I've got all these levels, I'm just going to delete all of them because they're all going to be ancient history at this point. If I do flip over to the weekly, this is down pretty far from those highs. Let's see, were there any reverse splits in the past? Just looking for purple M's along here. So I don't see any reverse splits, but it does seem like they're probably going to need to have one, considering that they're trading on the New York Stock Exchange at a price well below $1 a share. And, that is going to be following, at the end of February, they closed at a price of $1.66, then came down massively, starting the month of March off below, $1, closing around 60 cents on the 3rd. And so what we see here with this is, fade lower, hit a low yesterday of 42 cents. And so if you look at that, if we cover up that last zero there, it looks like it's 0.420 So that's fun. But this is putting in lower lows, as you can see there. Volume is diminishing, so maybe, that could be suggesting a bottom. But it just sellers could just start dumping. People could lose conviction as time goes on. So this could be going up or down, but I feel like it's just weak. Good to be cautious. We do have the 21-day moving average at $1.47. That would represent, a 200%, over 200% move to the upside. But I just think it's good to be taking risk off the table, so be cautious of that. And yeah, I mean, the 5% move in the pre-market, let's see, where is that? I'm just going to market the high over here. Where are we relative to that? Also, I guess I will, mark the close over there. And I might do that close in yellow just to differentiate those levels. So let's look over at the 10-minute time frame. Where are we relative to those levels? We're below all of them. So yeah, one to be cautious with. Lucid. Okay, I'll do that. And then that's probably my last one. I'm super tired from, I shouldn't have put the NIO video out last night. I was just excited. Got to manage that because, I wanted to go over NIO in the pre-market. But let's see, Lucid. Okay, let's check that out. Up 2.4%. I think I did have, I did have a put on this one, and I sold it, took a small profit. Probably over here could have made more money, but it was a $1.50 strike with the January expiration. I just, didn't want to hold it forever. Kind of wanted to take risk off the table in case the bottom was in. And I feel like $2 just being a psychological level, that's probably going to serve as a short-term bottom. And so that's kind of why I think I got out of that contract. So I got the contract, look up over here. Bookmarks, let's see, I guess I removed the Lucid put. Maybe TRL, nope, maybe options theses, Lucid. I guess I took that off, and so I might just put it over here in the bookmarks. And so I'm just going to search Lucid $1.50 put for January, just because I like to go further out. And then we can just look at the 8. No, I think this is fine. This is probably fine one. This is an August 21st expiration. Wow, that's far into the future. So maybe that's not the most exciting one to be looking at. And so yeah, I'm going to do one that, works for kind of my strategy, which would be looking at, let's see, December. So this is a little bit more my style. And there was some activity. It's kind of high volume. So yeah, if I just type in here and look up Lucid, what was the highest volume from yesterday? Which one did I put up? That's a $3 call. Crap. This is, what happens when I'm tired. I start fumbling with this stuff. So I'm going to remove that one that's over there. Oh man, I got to refresh this thing to remove it. And so yeah, I'm going to type in Lucid, and I want to just search all of them. And then I want to, chain is invalid, LCID. Okay, and so I want to do, let's see, the January put with a $1.50 strike. And so let's add that. So got that over there. And that is one that, I could look up what I traded it at, but I forget. But anyways, really what we want over here is, this kind of data. And if you do look at the bear bull slider there, more on the bearish side. And looking over the past 30 days, nothing too crazy going on with this. But what I think could probably happen with this is, excuse me, maybe we get, a bounce, maybe not to that gap. And then that fakes people out, and then it goes lower. So good to be cautious of that. And let's see. Lucid Group ascends while market falls. Some facts to note. And whenever a stock does that, if a stock goes up and everything else is going down, that's like a stronger sign. but it's only up about 2% in the pre-market, which is 5 cents. So I think that something like this is possible. So I would think that there's probably a dead cat bounce. I think that there's probably more downside in the markets. Yeah, I don't know. I've lost some conviction in Lucid and stuff. So hopefully that's helpful with there. But yeah, it's about 5 minutes to the hour, and I'm tired, so I'm gonna get closing this down. I've been working too much outside and then going to work and trying to do these streams. My back hurts and stuff. So anyways, if you did enjoy that content, which is, as usual, just my thoughts, if you found it helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care. Have a great day trading, and congrats on, the bottom looking like